All right. So now we're in the third video where we're going to be looking at your business loan request through the eyes of your banker. If you remember back in the introductory, what we talked about was, hey, it's not enough to go hand in hand, and let's just say you don't do that, but to just go to the banker saying, hey, this is what I need. Kind of talked about it a little bit in the last video, understanding the bank's credit box or the credit policy. You got to understand the sandbox that you're working with. So that's what we're going to be doing in this portion of the video series. Now, there's a lot of content here. So we're going to break this out into two separate videos. Okay. So in this first video, we're going to talk a little bit about the introduction here. We're talking about risk and also cash flow collateral analysis, but we're really going to be talking about risk. All right. So viewing your loan request, business loan request, rather, through your banker's eyes. Again, banking, business loan wise, retail consumer wise, all of it wise, really, banking is a risk game. Okay. In other words, banks have just through the years, I mean, ever since the creation of a bank, have gotten to the point where they're masters at identifying risk, understanding risk, being able to quantify. And that's all that's really saying. That's a fancy way of saying they can size up the risk of whether or not they're going to lose money, make money, and they always want to be on the side of making money. So what does that look like for you in terms of being able to put your business loan request in the eyes that the banker can say, oh, okay, great, because now you're speaking their language in terms of risk. And whenever you can talk a banker's language, it brings down the risk factor for them considerably. In other words, just think about it for yourself. If anybody makes things in life easier for you, that brings down the risk level or the discomfort level for you, and you're more willing to go down and progress down the road wherever this individual is trying to lead you. So bankers are no different. We talked about risk before. We identified several, whether it was operating risk, management risk, credit risk, market risk, and encapsulating all these things, because we could break all those down. And again, don't want this to be too heady. So we're just going to cover the brushstrokes here, and we'll get to those probably in another video course that I'm going to be offering. So stay tuned for that, because for you guys who've purchased this course, you're going to actually get a special bonus discount going for those additional course and that additional video course in the future. But now, to really get our minds wrapped around what I'm talking about with risk in terms of looking at your business loan request with the banker's eyes, we got to talk about the 5 C's of credit: character, capacity, capital, collateral, and condition, as well as calculated risk versus gambling risk. Then in the second video, we're going to talk about cash flow versus collateral analysis, and I'll leave that for the second video. You can see the points that we're going to talk about there, which are major points, particularly the second bullet point, but let's leave that for the second video. When we talk about risk, again, we're going to keep our mind and focus on operating, management, credit, market risk through the banker's eyes again. Risk is defined through Webster's Online Dictionary as a possibility of loss or injury. I think that's pretty self-explanatory. It's like anything living life is a risk. But more importantly for the bank, what does that look like? You know what I mean? And how can you tailor, your financing request for your business loan to speak that language to them? Let's break it down into each one of these risks that we've identified, okay? First one is operating risk. Now, this is the risk that results from the breakdowns in internal procedures, people, and systems of your business. As you know, in running a business, everything doesn't go in a straight line. In other words, every day that you operate a business, something goes wrong, something could go wrong, or the magnitude of the wrong could just be astronomical. That's what you would call an operating risk. Now, that doesn't necessarily say that things that could go wrong do go wrong, but banks would like to know, hey, what could go wrong? And not only what could go wrong in terms of operations, but how bad could it be for the business? So that's how the bank likes to look at operating risk. Management risk is the risk of loss due to incompetent management. Wow, guys. Now that is a mouthful. As you could probably already tell, since again, as I put this e-course together, I was thinking more along the lines, again, you can go to JerichoBizFinance.com and really get a feel for what we like to talk to in terms of who is our target market. It's those individuals or team of individuals that would be considered micro entrepreneurs, early stage entrepreneurs or self-employed individuals who is looking to build out their operational capacity, bringing on employees as they're taking on more jobs. That's who we identify with in terms of our market. So management risk in that regard, in terms of what it looks like in your banker's perspective, in your banker's eyes, they want to know that you know what you're doing. In other words, you're not just new to the industry or the market that you're serving or in business in, because if you are, you're going to have to take some lumps on the head. In other words, you're going to have to learn the ropes of that industry and market before the banker is willing to take your business loan request seriously. Let's move on to credit risk. Risk of loss due to default. Hey, it's kind of similar to operating risk, but from a banker's perspective, credit risk really speaks to, hey, look, ultimately, simply plain and put, if I lend this money to this business owner or team of business owners, what's the likelihood of this loan going belly up, of us losing out on this? Okay. And believe it or not, based on the information that a bank requests to get from you, they can pretty much put a good boundary or quantify, if you will, what that risk of default, credit risk, is going to look like for them. Now we can talk about, interest rate risk that comes along with this as well. Again, we're not going to get really heady into this, but again, credit risk is basically, hey, what's the default risk of lending this money to this individual? And the last one would be market risk. Okay. Market risk is basically the risk of loss due to macroeconomic forces. A fancy word that came up during the Great Recession was systemic risk. In other words, that's a macroeconomic risk. What does that mean? That means it could be something that you have no control over, i.e., interest rates go up 10%. I mean, they go up to 10%, rather. You ain't got no control over that. Nobody works for the Fed. You have no pull with the Fed. So that's what you would call a systemic risk. Or another one, probably more close to home for you, would be, let's just say you operate in the, the HVAC market. You run an HVAC contracting business. And let's just say one of their primary vendors that you work for, or across the board, let's just say wholesale, vendors that sell parts for an HVAC contractor. Something happens where they run up the prices of whatever their original components to put together these wholesale parts, and it increases those parts 50 to 60%. And there's nothing that you can do about it. So you have to either eat that cost as a business, on the back end side when they sell that to you, or you have to pass it on to your customers by increasing your prices. So again, that's a systemic risk. That's a risk that you have no control over. Okay. So in saying that, in looking at risk, hopefully we've done a good job of just really giving you guys base level exposures in terms of how a banker thinks about risk. It's more than just the word risk. It just breaks it down into these various components, and it helps them to kind of really peel back the onion in terms of really saying, okay, ultimately, do we want to make this loan to this particular business owner? So hopefully that this has been dynamite information for you, and that you will take this and that you will use this in your arsenal as you look to go put in a business loan request. So in the next video, we're going to be talking about cash flow and collateral analysis, and I'll see you in the next video.